Hey everybody, it's Lisa Vino here, and I'm so excited to be here with the Millionaire Author Mastermind, presenting Ashley, a CPA, with novel numbers. She has a 100,000 page slide deck here on taxes. I'm kidding. She has cut it down, but she's going to answer your questions, hopefully at the end, but also give you a thorough covering of kind of what to get started with bookkeeping and what can you deduct. I see we already have questions in the chat, so pop your questions in. This will be recorded and I will post the link and email it out to everybody. It will be on YouTube and in the Millionaire Author Mastermind group, and you can post questions when I post it in the Facebook group. So take it away, Ashley.
Hey guys, I'm Ashley. I am a CPA turned romance author, much to my parents' absolute displeasure. The master's degree, CPA license, bachelor's degree, all down the toilet, just so I can make a lot less writing books, writing kissing books. There we go. So I help the number nervous author go from money mess to a financial success because I realized that there's no help for authors in terms of finances and accounting. There's nothing really out there in terms of what you can do for taxes or anything. So I figured, hey, this is the way to make it so my parents don't disown me when they die, and I will use my license for good rather than evil. But I'm a big believer that your time should be spent storytelling and not bookkeeping. So hopefully this can break it down a little bit. Lee and I talked a lot about what we should talk about, what we shouldn't talk about. I'm staying pretty high level, US based. The deduction should apply across countries, but definitely double check. I'm going to go over into lots of different topics. I'm going to try to be fast because I'm long-winded and we only have an hour. So that's kind of the high level of things that we're going to talk about. Again, I'm Ashley. I have the whole CPA license thing. It's 12 hours of exams. Chat GPT, I don't think could even pass the exam until last year. It could pass the bar and the medical exam before it could pass the CPA exam. So it's fun stuff. So I have two little kids. One of them is the result of an IVF mix-up story. If you ever like that idea, it does happen in real life, and it happened to me. So he's currently at preschool right now. But yeah, so I gave that all up to write books and apparently now help authors. So my insurance makes me say this. This is not tax advice. This is for informational purposes. Make sure that you check with your own accountant before implementing any of these strategies. And just know that I attended, I don't know what you would want to call it, sat in on someone else's tax talk a couple weeks ago, and I wanted to see what they were talking about. And I want to caution all of you that there is a lot of gray in taxes, like Lee and I were talking about earlier. There's interpretation. This one woman was talking about how, like, she was deducting her RV that she uses with her families, or her, I don't know, her handguns and her mules and her cows and her farm animals, and it wasn't a farm. So basically all these different things. And this is an experienced accountant and talking about how she could get you to deduct these things too. And there's just a degree of risk that you can accept when you look at different things. So like what I might say is a good deduction, someone else might say it's not. Check with your professional. That's all. Okay, so we're not really doing videos here. It doesn't look like anyone's really on the video except for me and Lee. So I can't see your faces if I'm really confusing you. So Lee's gonna have to stop me if someone in the chat saying, "Oh my God." But I will try to be hi. I'll try to be as clear as possible. But usually when I talk with accountant or authors, I'll say, "Hey, what do you do for your bookkeeping?" And usually the response is, "What bookkeeping? Hi." And that's an answer that makes me want to cry, but I hold the tears in. So I am here to tell you to talk about the joys of bookkeeping and how it can make your life actually much easier, even though you didn't want to go to school to become a bookkeeper. It can make your life much easier if you do actually keep your books clean. One tax tip. I don't care where you are in the world today. Please leave with this tax tip and please implement it immediately. Separate your finance streams. All right. You have a different checking account for your business versus your personal household finances. Please do that. Please, please. Not only are there legal ramifications for mixing it up, you kind of pierce the corporate veil if you want to get into that, but also in terms of recreating your books at the end of the year, it is so much easier to just look at the deposits and the outgoings of one checking account rather than handing your accountant or your bookkeeper or whoever's doing it, or even doing it yourself and looking at your personal bank statement and being like, all right, which one was for little Jimmy's Amazon order versus which one was for mine for ordering the Trope Thesaurus? Or just separate them. Different PayPal, different Square account. Heck, get a different email account, different checking account. No fee checking accounts exist. I can't recommend them enough. Please do it. It will make your life so much easier. Don't mix the funds. Don't cross the streams, as Ghostbusters would say. So if you do this, you won't miss out on important tax savings. You won't miss out on deductions. It will cause you so much less stress trying to remember back to what happened a year ago when you were creating these numbers. But also, if you want to get like really technical, like I know I mean, I've only been writing for like 2 years, but I like to keep track of my profit across pen names and books. I like to see when one of my books is finally turning a profit versus what book or what series is a total dud. And I need to just like get out of that series ASAP. So if you really keep really good books, like I know I use QuickBooks Online and I'm able to see that per each book and through each series. It's just, it's so you have better decision making, more empowered decision making. You can pivot, you can decide easier. And not only that, I mean, in case you have a series of losses year after year, in terms of hobby loss rules, I mean, it's nice to have the separate set of books. So you can say to the IRS, yes, this is a business. There is an internet rumor. There is an internet rumor that I wish I could erase, but people tend to say, oh, if you have 3 out of 5 years of losses, you can't take those deductions anymore. It's now a hobby by the IRS. No, 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 no. That is a rumor. That's not true. Keep taking those deductions. It's still your business. As long as you are actually trying to make a profit and you are doing everything you can, there's a whole list that the IRS gives you on their website that says if you are doing these things, then yeah, we'll consider you a business. We'll take this into consideration and we won't fight you on it. Do those things. I mean, it's so easy. One of them is separating your bank accounts right there. It's a simple thing that you can do. And I think it will change your life in terms of saving money for tax prep, saving headaches, making everything so much easier, making better business decisions, and also having a leg to stand on in front of the IRS. So I implore you to please keep books one way or another, whether it's paper trackers, like, oh my God. So paper trackers, people really love them. I follow Sarah Cannon on Facebook because I love her journals and like she has paper journals all the time. I literally made a paper journal for authors because people love using washi tape. And now I'm addicted to washi tape because apparently that's a thing now in my 30s. So like you can use anything like this.
Wait, you made that? Can you get the link to that
Yeah.
it's on Amazon and everything?
Yeah, yeah. I came out with it this month. It like has buckets where you put things. Like I know it's not really the point of this upsell, but like buckets for where you store all of your different expenses, and then it combines into your Schedule C at the end of the year to prepare your tax return. Because people love paper trackers. Personally, like I'm an Excel girly. I love Excel, but it doesn't beat QuickBooks. Automated feeds in QuickBooks pull your transactions in from your bank accounts, your PayPal, whatever, your Square. And then all you have to do is you can either set up rules so it automatically categorizes it for you, or you can just select from the drop down where it goes in your expenses, and that's your bookkeeping. You don't have to worry about writing a number wrong, translocating a figure, messing up a date. You can even attach invoices on it so you have better record keeping later so you can see what that invoice was for. Like I promise I'm not a QuickBooks rep. I just love it. So we'll go on to the next one. Cash versus accrual accounting. I want to talk about this because even though I know you're not accountants and will never be accountants probably, it's important to know that because you know how when we earn money in December, we get paid for it in end of February. I think that's the count. That means that because that money is paid in the following year, the year that we're paid in is the year that's when we're taxed on that money. We get taxed on the money that we receive or pay out in that year. So in terms of tax strategy, that's really good. So if you're keeping your books throughout the year and you're like, ooh, I have a huge income, it puts me up into the next tax bracket by maybe $1,000 or $2,000, I'm over into the next tax bracket in December. there are strategies that you can implement in December where your cash basis, you can buy expenses that you were going to buy in January in December, get that deduction on the current year taxes, and then fall down into that lower tax bracket and save yourself however many thousands of dollars. So it's just that's another good point of record keeping. You're having your finger on the pulse throughout the year, and you're knowing that you're taxed when the money comes in, you're taxed when the cash goes out. Credit card charges do count as cash going out. So even though you haven't paid the credit card, if you have a credit card balance at 12/31, take those expenses, baby. Oh, Lee, were you gonna say something?
Oh, just you can see Amazon paying you quickly before December, the end of December. They're like, here's your money. And then my co-writers are the same way. They're like, here's your money, Lee. And I'm like, okay. And I'm like, real fast. And that's my expense or whatever. Or
Yep,
not. My
exactly.
husband's like, you didn't need to buy more things. I was like, but I have the cash.
But I wanted that geode for my bookshelf. Come on. You can see where my priorities are. Anyways, so given that it's almost tax time and you guys are probably all thinking about this, these are the type of entities you can be. I left off B Corp. If you ever want to talk about B Corps, hit me up. I'll talk about it all day. But anyways, these are the entities. Those first 5 all have income that's reported on your individual 1040 income tax return. The C Corp has its own tax return, they have their own tax return, but it has its own tax filing rate, which means it's paying its own income taxes, and nothing from that income tax return except your W-2 goes onto your personal income tax return. Therefore, if you are filing a multi-member LLC, a partnership, or an S Corp, those are all due on March 15th, which means you cannot file your personal income tax returns with your spouse or whatever until those returns are filed. Like, make sure you note that if you're ever going to be any of those entities, that, I mean, the CPA profession is kind of dying. It is very hard to find CPAs willing to take on clients right now. So recognize the fact that these tax returns are an additional expense. They are complicated. I do not recommend people filing their own 1065 or 1120 or 1120S tax return. We get people that self-file them, and I'd get them in and I'd cringe. They'd be that bad, and it would be like, oh, you're just asking to be audited. You didn't even fill out this required schedule, but they didn't know they were supposed to fill it out. Anyway, so just know that if you did want to set up like a partnership between you and your spouse, or S Corp even, I know there's the other rumor. I'm just going to apparently burn all the rumors today. It's not once I hit 10 grand, I can be an LLC. It is not once I hit 50 grand, I should be an S Corp. It is not one size fits all. I wish it was. Please talk with an accountant in your area, because states can be very friendly to those type of entities, or they can be very nasty to those type of entities. So depending on what state you're in, that really will change. Like, I have people come to me all the time and say, oh, I should be an S Corp, right? And it's like, not necessarily. It really is. You got to look at it on your own. And I know people don't want to hear that. And I know they don't want to pay for an hour with a CPA that's going to cost them $200 an hour. But if you can't pay a CPA $200 an hour to consult you on whether or not an S Corp is a good choice for you, then it's probably not a good choice for you, because if you can't afford that 1 hour fee, you're probably not going to be able to afford the tax prep. Like, I mean, the new federal reporting requirements for international reporting for the K2s and K3s, if any of you or your accountants have mentioned that, is just absolutely insane. I mean, I've worked with high net worth clients in my CPA firm for the last 10 years. So like we're out dealing with larger numbers anyways, but like we wouldn't even touch an S Corp return for less than $2,000. To put it in frame of reference. I mean, I'm in the Northeast where CPA rates are higher as opposed to like the Midwest, but just know that if you are looking at those additional tax returns and looking to convert, talk with someone, please. I beg you. Chances are, if you're starting out, you're probably just a sole proprietor. If you want to be a single member LLC, look into the rules in your state. In my state, it's fairly easy. You register with the state of New Hampshire, you pay $102 a year for an LLC fee, and that's all you got to do. Other states, I mean, also we don't have sales tax, so that's good. But like other states, I mean, there's a minimal fee. I think in California, maybe it's California, there's like a minimum $500 tax on LLCs throughout the year. So again, look at your situation. Oh, it's higher than that? Okay. Yep. Oh God. Yeah. Okay. $800. I knew it was big. So yeah, you just make sure you're looking at what is required for you. There was one lawyer, this is not legal advice, but there was one lawyer I knew that said that actually having an LLC as a writer doesn't offer you much protection. And I was saying, oh, tell me more, because I always tell my clients to be an LLC in New Hampshire just because it's just the extra $100. What's the big deal? And she was saying that because authors would typically be sued for defamation, libel, or copyright infringement. And because those are personal violations, the LLC designation doesn't necessarily protect you anymore. And so now all of a sudden you're being sued as essentially as if you were a sole proprietor. I that was one lawyer that told me that once. But look into that, because if the only reason you're going to be an LLC is because of that reason, maybe a professional liability or a liability policy would get you the same protections in your state and maybe not cost $800. But that's probably getting way more in the weeds than what you want me to for this talk. So anyways, if you're a sole proprietor or single member LLC, you do not take a paycheck. Anything you draw out from the company is not taxed by the government. In fact, the IRS doesn't even want to know what you put in or took out of your Schedule C tax return. They don't care whether you made 50 grand this year and took out 50 grand, you're still being taxed on the 50 grand that you earned. If you left 50 grand in the company and you took it out the following year, they don't care. They're not going to tax you on the following year when you took it out. They're taxing it on the year that you earned it. You'll hear a lot of people saying that you don't pay as many self-employment taxes on S corps. You're paying that 15.3% as an employer as the S corp, and you're paying that, I mean, half of it, the 7.65 as an employer, and you're also paying the 7.65 as an employee. So you're still paying those taxes. The remainder, though, on your tax return isn't subject to self-employment taxes. So that's what they mean when they're talking about that. But you can talk to your own tax professional about that. So this is the tax return. For the love of God, they were all due yesterday. But please, if you needed to file 1099s, there is a question on every single tax return. I highlighted them here, and you will see them all. It says, were you required to file 1099s, or did you make any payments that required you to file 1099s? And if you were required to, did you? I can't think of a bigger red flag to the IRS if you said, yes, I was supposed to file them, and no, I didn't. I'm not supposed to speak on the likelihood of an audit based on my license, but there is a literal question saying, were you required to file them? Yes or no? If so, did you? Yes or no? Be honest and do it. Do it. Like the IRS lets you free e-file up to a certain amount on their website. And I'm pretty sure I have a thing later about what 1099s are. So don't worry, I will talk about it. But just know that on every type of entity tax return that you have, they have this question. Here is where you can put the other expenses and where you put also mileage if you want. The other expenses, don't go crazy. Don't be like, hey, this was my electricity. This is a bad example because you don't usually have utilities for author businesses. But here's my electricity, here's my water and sewer, here's my heat, here's my oil. I'm listing them all out. Dude, just put them up into the utilities bucket. They have 27 buckets that you can use. I will talk about office expense later. It's my favorite category. Throw it all in there. It all nets out. I'll dive all into that later. This is where it shows up on your regular income tax return. That is the number on which self-employment tax is calculated, that 15.3. You do get a deduction for half of that 15.3 later on your tax return, which reduces your ordinary income tax. On your income tax return now as a writer, if you're a Schedule C reporter, you have or even a partnership, you have self-employment taxes, ordinary income taxes. They're calculated differently. They add together. That's your total income tax. When you see that you have to pay estimates or your federal withholding, it all gets reduced from that same bucket. So you're not paying one check for self-employment taxes and one check for ordinary income taxes. They get added together on your tax return. So your withholding from your paycheck or your spouse's paycheck can be used to offset some of that self-employment taxes. You also, if you guys are not covered on like a spouse's health insurance plan or your own health insurance plan, or you weren't even eligible to participate on a health insurance plan, your premiums for your health insurance, as well as your dental insurance premiums, long-term care life insurance premiums. I don't suggest taking those because that will make the benefits taxable later, but those premiums for your health insurance are deductible as well. So your whole family, like you're self-employed, that's your sole business. You're not eligible to participate in any other plan. You had to buy a plan through Anthem or whatever. Your premiums for your whole family on this form as a deduction. Don't forget that. Partnerships, I don't know if anyone here is a partnership or a multi-member LLC. You might be. I'm going to assume no, unless someone kind of jumps in on the audio. All right. So we're going to, oh, you are. Okay, great. So you probably know all this, but you also don't take a paycheck. You may be able to take guaranteed pay, which is irrelevant based on the net income that you get. You know that you filed a 1065 and the resulting form is a form K1. The K1, for everyone who doesn't know, is the form that is beautiful and it pulls all of the information onto your actual 1040 tax return. You can still place self-employment income on this income. There are different types of partnerships. One thing that makes partnership returns and other entity returns more complicated than the single member LLC or the sole proprietorships is that you have to report all of the money. You have to report your loans to and from the company. If they're above 10 grand, technically you're supposed to be charging yourself an interest rate or charging the company an interest rate. I've seen people with $300,000 of loans to the company to keep the company going and not charging interest on that loan to the company. At some point, if they were ever audited, the IRS would be like, huh, maybe not. We should be, you can't just keep doing that. So you have to keep track of those distributions, contributions. Some states actually tax those, and you actually have to report a balance sheet on all of these future returns. So this is the first page of the 1065. Again, this entity itself will pay no taxes. Instead, the net income number will flow through onto your personal income tax return. One thing I did include on this page was just at the top that you can see that you could be a domestic general partnership, a domestic limited partnership, a domestic limited liability partnership, a domestic limited liability company. You can see LLC, limited liability company, not limited liability corporation. That is important to note. If you're debating on whether or not you need to send someone a 1099, corporations, S corps and C corps, do not need to get 1099s. If you see someone and they have an LLC at the end of their name, assume that they are eligible to receive 1099s until they give you a W-9 that says they're not. Like that, the fines for not completing the 1099s, I cannot stress this enough. If you willfully do not repair them or prepare them, are $500 plus per return, per person that you should have sent the 1099 to. So I cannot stress that enough to please look into whether you need to file those. And then here's the 1099 question. Hello, audit flag. I'm not going to get into the partnership audit rules, but it does complicate matters, which is why I definitely suggest not doing your own tax return. Oh yeah, Lee.
Quick question, because people are popping it and asking about PayPal.
Yeah, okay. So PayPal, as long as you've paid someone through PayPal Business, PayPal will issue the 1099 for you. If you've paid someone, you paid your editor through PayPal Friends and Family, they're not going to give that 1099, so you have to. Same with Square, same with Venmo. However, Zelle, nope. Zelle is the odd one out. They will not prepare 1099s. Anyone you've paid more than $600 to during the year that's not a corporation or a S corp who didn't give you supplies, like there's a whole list. Zelle would need to give you a 1099. Sorry guys, I'm not even like looking at the chat.
Yeah, I'll watch it, but that was pertinent to what you just said. So now we know. Thank you.
Yeah. Okay, so then here you can see how the balance sheet is very important, which means it's absolutely critical that you have a set of books because they need to know what you have for all of those balance sheet accounts. I can't say that I would ever actually, I think I've had one client in 10 years not keep a record of books. And it was because they were house flipping and they just gave me a statement at the end of the year and I like recreated their balance sheet. But that's we as a collective, the author group would need to keep books for this. And that's the K1 that flows onto your tax return. S corps, you can take the paycheck. I did kind of do my mini S corp rant earlier. It looks very similar to that 1065. You need to keep track of all of the transactions because the IRS does want to see money in, money out, where it went, loans, all of those balance sheet transactions. It wants to see them all. And then same with C Corps. C Corps had kind of a makeover in the last couple years where their tax rate changed. But basically, this is a standalone. So this can be due on the 15th day of the third month after its year end. So it's not necessarily a calendar year. I've had clients that have ended their year end on October 31st or April 30th, whatever it is. So they you can have it not on a calendar year. I recommend calendar year. We are in a world where calendar year is pretty good. So I recommend that if you were ever going to be a C Corp, I do recommend being cash basis. Again, that's an election you have to put on the very top of your tax return, whether you're accrual or cash. And this pays its own taxes. Again, this will not influence your personal income tax return at all. The only thing from your C Corp that affects you is whether or not you receive dividends, I guess whether you sold it at some point, or if you got your W-2. And that's how that affects your income tax return. Again, pretty much the same as the S Corp return. And now the juicy stuff where I'm sure you guys were waiting to get to. On your Schedule C, when you're looking at, oh my God, how do I report everything because I am a new author? You don't need to break out all of your income sources. In your income section, you don't need to be like, oh, Ingram Spark, KDP, Substack, whatever. You don't need to do that. One lump sum item for income is all the IRS cares about. Famous last words, I'm sure if you're ever audited, you'll be like, actually told me not. But I lumped them together for years and years and years and will continue to do so until the day I die. I lump the income together. In terms of fees, so like say that you're paying the delivery fees of 35 cents on an ebook from Amazon. That's not what's paid to you. You're only paying taxes on what was paid to you. So even though if you pull up your royalties estimator and you pull up last year, and it says that you made 25 grand, double check that that is the amount, because it's not going to be. Only pay taxes on the amount that you received in cash. Also, when you get those nifty little statements from KDP that says, oh, you made $100 this month, but your deposit was only for 96, you're only being taxed on the 96. You're being taxed on what you receive. Those KDP statements that they send out sometimes have exchange rate issues, and they don't always tie to the bank deposits. That's why it's really nice to have that separate checking account where you can subtotal all of those deposits, and then you can verify that the 1099s that you received from these different entities is actually legit, because they do make mistakes too. So just remember that for when you're looking at your income. Taking a sip of water because I'm talking very fast, and I'm sorry if you guys are not getting anything out of this.
No, it's awesome. And everyone's having a chocolate break or Xanax or whatever you need to get yourself through. I'm kidding.
I
I
do
go,
some Benadryl.
I go between, we're going to do this so well. And we're going to fill in all the boxes perfectly. And I guess they'll just fine us if we're all wrong, and we'll pay the fee.
6 years to audit me. We're good. So, so like for me with my consulting, I have it's a fine line. I say that it's still in the author world, so I report it all on the same Schedule C as my book income. Say that I was an editor or a formatter. Also, I would include that up under gross royalties. If you're also a physical therapist on the side, I believe, not knowing your state or your situation, would probably have to have its own Schedule C. There's this new thing called the QBI deduction from a couple years ago. It kind of taxes things differently depending on what type of entity you are. So make sure that if you are starting up like a separate side hustle that is unrelated to your books, that you talk with someone specific. Sometimes accountants will give like a free 30-minute consultation where you can talk with them and make sure that that's the right fit for you. But if you're doing income within your writer sphere, you should be able to report all of that income up together. I hope that's clear. So for advertising, I mean, that is a lot. That's any cost for promoting your business, website, Facebook ads, Amazon ads, any promos, book boxes, book launches, swag, wonderful, like the edges, when they paint the edges I wish I knew how to do that. Like you could put that under advertising. If you've paid someplace like Book Sirens or Book Funnel, even anything that you're using to promote your business. One tax tip that I'll give is that your accountant might disagree, but mine is if you're approached by someone and they say, "Hey, will you donate to our charity?" I believe that if you're getting your name put on somewhere and plastered, if you're donating to like a charity fun run, usually donations are not deductible on your business. Usually you have to take them off and put them on your personal. I believe though that if you're donating to a local fun run and it has your name somewhere that says so and so author sponsored this, I believe that there is an advertising component to that, and you can take a portion of that as advertising expenses. So just kind of be aware of that and give that to your tax preparer at tax time because they might be able to take some of that for you and it won't just be lost into, well, better luck next year deduction. For car and truck expenses, usually people take mileage. Not many people take actual. I would say that mileage just seems easier to keep track of because our time is much better spent writing. It does need to be a contemporaneous log though. So some people use apps, some people have like a little logbook in their car. Um, some people write it down during the year. But I mean, I know that when a client tells me I drove 10,000 miles during the year and it was 80% business use, and on a tax return, I have to put that they drove 8,000 miles for business and 2,000 per personal. That's a real round number, guys. Real round number that if your preparer saw it and the IRS saw it, they'd say, huh, I wonder if that was an actual number. Keep a log, make sure the numbers are legit numbers and not just numbers that you're kind of estimating, or else you're just asking for trouble. Probably would get in trouble myself for saying that. So we have commissions and fees, we have contract labor. It's important to note that I have not always said that if you have contract labor, they might not get a 1099. You might have paid a VA $200 and put it into contract labor expense, but they obviously don't get a 1099 because they haven't hit that $600 threshold. So you might have $1,000 in contract labor in that bucket, but you might not have had a 1099 filing responsibility for any of them because, death by a thousand cuts. So don't freak out if you have contract labor expenses and think, oh my God, I'm going to get audited. As long as you're still on the up and up and you can justify those expenses with receipts, you're fine. That would be where you pay like PAs, VAs, editors, formatters, cover designers, a bookkeeper, any of those things you could put into contract labor. The joy of all of this is that it all boils down to the same spot. So if you wanted to put it elsewhere, you also could. Don't get bogged down in the weeds. Better to record it somewhere and have someone move it later. Or what's the worst the IRS is going to do? Hey, it shouldn't have gone in contract labor. It should have gone into legal and professional services. That's fine. It doesn't change your tax balance at all for the IRS. So don't stress about it, please. Depreciation expense, I'm going to tell you, if you bought a desk for $3,000, yeah, it should probably be depreciated. If you bought a desk for $2,000, please don't put it on your asset schedule. I would say, put that into office expense. There's a de minimis threshold with the IRS of $2,500. Look it up if it's relevant to you. But know that if you've bought a physical item of more than $2,500, you'd probably need to expense it or capitalize it. If you have employees, you have employee benefit programs. I do want to mention there's a couple of these that like insurance down here. This is not for your home insurance. This is general liability. This is professional liability insurance, cyber insurance if you're doing direct sales and have a website. This is not health insurance. This is insurance for your business. Interest is if you have interest on your credit cards or any loans that you've taken out for your business. Legal or professional services, bookkeeping, payroll fees, retirement plan fees, lawyers or attorneys. That's always a good one for when you're getting your ducks in a row. Office expense is my favorite bucket. I throw anything and everything in there. Like I am not picky. Books, resource materials. I'm going to absolutely blank now. Any subscription, if you have like World Anvil or, yeah, obviously I'm not going to be able to think of anything right now because I'm like going a million miles a minute, but any of those internet subscriptions or computer subscriptions, computer software, Atticus, Vellum, all of those things can go into office expense. I calendars, pens, pencils, papers, printers, even computers. If the computer's $7,000, no, you'd probably have to capitalize that. A $1,500 MacBook or whatever, yeah, throw it into office expense, get that deduction. For pension and profit sharing plans, that is not for you. That is for if you have employees. Yours goes on that different spot on the 1040 that I showed you earlier. So usually this line is blank unless you have employees. Rent or lease, again, that's not for your house. That is for if you rented an office space somewhere or rented a printer. Repairs or maintenance, repairs on your work computer, repairs or maintenance on a fan above you in your home office. Maybe take that one back. That one should probably go under home office expense. But I hope you kind of get the gist on the repairs and maintenance on your work assets. Supplies, I believe that authors should be cash basis. Many other people also agree with that. We're not really accrual, so I don't really keep track of cost of goods sold for me. Below with the IRS thresholds now, it's pretty easy to not have to keep track of inventory in terms of reporting it on your tax return. Normally for bigger companies that I've dealt with, it's like you have to report your beginning inventory, your ending inventory, and then report all of the cost of goods sold. I don't do that for authors. I strictly put like for my book creation expenses, if I have an ISBN, copyright, cover, I'm trying to think of other fees that I have, editing for that book, that kind of thing. I would put that all under the other expense at the bottom. And I would create a new category called book production expense. I think that's what I call it. You could put it into supplies if you want. I like to break it out because I like to see it broken out in the tax return. I don't think the IRS cares. They've never told me one way or another, but that's what I do for those book production costs. Again, I mean, if you bought, what is it, 100 ISBNs from Bowker, you could probably throw them into office expense if you wanted to. That's fine. I just put them into the book costs. It's all about how you feel it works out for you and your business. Taxes and licenses, I'm blessed that I don't live in a sales tax state, but I bet that if I did, I'd have a lot of taxes and licenses to report. So that would be there. Payroll taxes would go there. Your LLC fees, trade names, doing business as, those kind of things could all go under taxes and licenses as well. Travel, that's if you have planes or bus tickets, taxis, hotel rentals, that sort of thing for business. Don't try to take your kid's hotel or your kid's airplane ticket on your business. Your tax preparer is not going to know. And it's going to suck if the IRS comes back to you for that. And your IRS is like, your accountant is like, I didn't know that. But so don't try to scooch that in there. Meals, generally limited to 50%. It got a little screwy during COVID times, but right now back down to limited to 50%. Utilities, not for your home office. If you have a second phone line that comes into your home office, or you have a she shed out back or a he shed out back where you have a separate, like a separate powered connection, separate electricity, yeah, those are things that you can be metered out and you can actually see. If it's just part of your home office, doesn't go here, it goes on a different form, Form 8829, I believe. Wages also is again for what you take, is not what you take, is what you pay employees. Again, whatever you take out from your company is a draw, not something that you get to take a deduction for. I did talk about the charitable deductions. I did talk about the de minimis rules. Say that you bought like a really nice desk and a walking treadmill to go underneath it. You might not necessarily need to capitalize that walking treadmill again if it's under that $2,500. You have to choose that election on your tax return year after year, but it can save you a lot of headache in terms of tracking depreciation for some of these assets. Ghosting. I'm sure we have all unfortunately had someone that we've paid and then they never get back to us and never deliver what we've asked them to do. You could still deduct that expense. Just because you made the bad expense doesn't mean that you get penalized for that. Careful though, that still might mean that they need to get a 1099 if they're like, say, a sole proprietor and you paid them $1,000. And you might be thinking, oh my God, how can I actually report a 1099 to them if they're not replying to any of my things? The IRS has very clear instructions on how to do that if a person is uncooperative with 1099s. And It is much better for you to follow those instructions and try than get yelled at later if you didn't file them and the IRS ever figures that out. There are different rules if the contractor is not a US citizen though. So keep a look at that. Pretty sure that if they're in like Ukraine, for instance, like it's different rules on if they're a not US citizen. We did talk about how someone here, I forget who, did have the 1065 bucket. Their buckets are much smaller and you actually have more creativity on the other deductions bucket. So it's similar to the Schedule C buckets. That's generally what I end up creating the other deductions as in those lumps as well. But it's very similar thing. It's all the same across the entities. So the home office. I saw a woman on TikTok the other day who started off with saying, I'm not an accountant, but, and then she gave wrong advice. So let's talk about this for a minute. Just because you have a home office and you have a cat that hangs out, oh my God, did I stop it? Okay, sorry. Just because you have a cat that hangs out on that windowsill does not mean that you get to take a deduction for that cat. Okay, are we clear?
She said that?
Dude, I couldn't stop myself from commenting on it and saying, as a CPA, I can give this tax advice. Please no. And she's like, well, you need to look up on your tax laws.
Wait.
Yeah.
Okay, yeah, don't deduct your cat, guys. But what can we deduct?
Yes. What can you deduct? So if your cat was your spokesperson and you had it on all of your marketing materials, yes, then that's the thing. If it's like, there are lots of ways you can deduct a cat. That's not one of them, just because it hangs out on the window. So what things you can deduct? You can deduct a portion, you figure out your home office square footage, and you figure out the square footage of your home. That percentage, around 10% or so, is what you can take, usually around 10% or so, is what you can take out of all those expenses. So your property taxes, your mortgage interest, your snow plowing for your driveway. Landscaping is not necessarily acceptable. Don't do that one. Apparently the IRS does not care that you meet with clients at your home or something like that. They don't like it. Your utilities, heat, oil, water and sewer, trash and garbage, all of those expenses, keep track of them. If you got a new roof on your house, keep track of it. You sided your house, keep track of it. All of those things can go into your home office deduction. And especially, those are all indirect expenses, but direct expenses for your office, say that you like re-wallpapered or redid your whole office because you're making TikTok videos and you want it to have a cool ambiance. Those are things that you can deduct. So those are direct expenses. So if you repaint this whole office, yes, record that as a direct expense on your home office. One thing I do want to caution you on is, it's kind of why I'm dragging my feet on whether I even want to deduct my home office, is it has to be exclusive and your primary use. So you cannot have a crib in this room. It cannot be your kid's bedroom. It cannot be your living room. You have to be careful and make sure that it is your exclusive use. There are different rules on whether your spouse, say, also uses that home office space, and how you can figure out who gets to deduct what. But just know that there are very, very detailed rules on the IRS's website on how you can deduct it. I disagreed. I told you about the nightmare tax accountant from a couple weeks ago that I watched her presentation. She was saying that you're not required to deduct depreciation on your home residence. I disagree with that. This is one of those areas where it is apparently gray. I didn't think it was gray, but this is a good example for all of you to live by or to understand when you're hearing advice from anyone, including myself, is that they said that no, you don't have to deduct your depreciation on your house, which is true. Then I said, well, what about when you sell the house? Do you have the depreciation recapture on your income? And they said, no. And I looked up the IRS regulations later and it said depreciation allowed or allowable and looked it up ad nauseum. Please talk to your accountant if you're going to depreciate your home office. And then later on, when you sell your house, get a tax preparer that year, please. I won't crazy you with the details, but put a star, say in your notes right now, if you're taking your notes, say, if I take home office and depreciate my house, if I take home office, that's it. Talk to a preparer in the year that I sell my house. That's all I'm going to give you. If you want to talk about it more later, I am more than happy to talk your ear off, but we're at the final 15 minutes and I got 10 slides to go. So just put that asterisk there and talk to someone later. So I did talk about this. There is a simplified option where you can deduct $5 per square foot of your home up to the 300 things. So that means you don't have to keep track of that snow plowing, cable, rent, heating, cooling, water, whatever. That's a good option. Doesn't, in my opinion, it doesn't get you out of the depreciation allowed or allowable. So again, make a note. If you're using home office, and you're talking to an accountant, the year that you sell it, make sure you mention that. 1099s. I promised you guys I'd talk about this, and I don't know if I've freaked anyone out because I haven't been able to see the chat yet. But what are they and who receives them? They're independent contractors, freelancers, individuals who are not employees of you, who provide services to your business. If you've paid them over $600 or more in a given year, and they are not a C Corp or an S Corp, then they need to receive a 1099. So there's lots of if statements in there. So bear with me. You pay an editor who is a sole proprietor $800. They need a 1099. Yes, like that's not questionable. You paid someone who is an S Corp $800 to be an editor. No, they don't need one. So it needs to be over that $600 threshold, and you file 1099 NEC. They changed this up a couple years ago. It's now NEC, non-employee compensation. You can figure out whether they are a S Corp or a C Corp by giving them a W-9, and they will fill it out with their name, address, their taxpayer identification number, and their, that's it. That's all that you need on the W-9. And then you enter on the 1099 what the amount was that you paid them. It's the IRS's way of making sure that independent contractors don't take money under the table. Again, if you paid through those third-party payers, they will issue the 1099 for you if you've paid them under the business section. If it's friends and family, you need to get that 1099 out to them if you need to do that.
So the PayPal business is worth the expense, especially we have a lot of people ask about paying translators, cover artists in other companies. But I'm just going to reiterate what you said, and then you're going to correct me. The threshold is $600. Someone asked if it was $10. It's $600.
Someone is kind of right. We'll go into that.
Great. Go for it.
This is why you pay CPAs in 6-minute increments. Okay, so if you have done any kind of royalty share with someone and you've published a book for them and you need to pay them royalties for their portion, yes, the threshold is $10. And that gets filed on the 1099 miscellaneous, the MISC. So that one, yes, the threshold is $10. Now you can keep going.
Well, I just answered this question wrong. So ignore me. It's $10 for co-writers.
For anyone who's receiving royalties.
Anyone receiving royalties. Great. Back to you.
Okay, so you're required to issue them online if you have more than 10 that you need to file. So if you use like QuickBooks Online, another plug, I swear I'm not paid by them. They will send the 1099s for you. If you have less than 10 people that you need to send 1099s to, you have to do it on the IRS's like carbon copy form. You can't just print out a 1099 online, which I think is absolutely insane. So you have to go to like a post office or a local CPA firm or like Staples and buy the form and then fill it out. And then sometimes you have to send it to the person, no doubt, by January 31st. And then the IRS, it kind of changes based on the deadline. I think I have it. Yeah, so if you're filing it to the recipient, they need it by January 31st. If you're filing it with the IRS, the 1099, they want by different due dates, depending on when you file it. The 1099 NEC also is due on the 31st. I will give you guys all a second to process that.
Okay, there's people who are like, I'm late. And I think the answer is like, go do it as soon as this webinar.
Yes.
Okay.
Yep. So I have, famous last words, I have never seen the IRS come after someone for filing late. However, if you don't file at all, there is no statute of limitations, which means they can come back to you 5 years from now and fine the heck out of you. So it is much better to file it late versus not file it at all.
So if people are filing through TurboTax is probably issuing the paper to the person and filing it with the IRS simultaneously.
It's not like a tax return. Like, I guess I don't know if TurboTax does 1099s. So, but basically, if you if it does, then basically, so, okay, my
Check to see what they do. Yeah, make sure they do it
Yeah.
right.
Yeah. You wanna make sure that it's being remitted like, you can send it via email to the recipients if you want. I don't think you're required to send it by paper, but double check that. But I know, like, Intuit, for an instance, when you file those 1099s, they'll send copies to the recipients and remit it to the IRS. And, some states, I do believe, require a copy of it. Check the state that you're in. New Hampshire doesn't require the 3rd copy, but some states I think do.
And then again, when your translator or your cover artist is in Portugal.
Different rules completely. So, I think generally, as long as they don't have any, like, actual presence in the US, I think you're not
Okay.
required to send a 1099 to them, but the IRS rules do say what you're supposed to do if they're not a US resident, so double check that.
Double check it, guys. Cool. All right. I'll stop talking and let you keep going.
No, it's okay. So, like, basically, the penalties, if you were supposed to send out 1099s for 2023 and the IRS, for some reason, were to discover this and come after you for it, like, the fines can be up to, like, $500 per 1099 you were supposed to issue, sometimes more than that. So, again, I've never seen anyone actually in trouble for it, but just know that that is a responsibility that no one ever talks about. Contractors versus employee relationships. This kind of goes in hand with things that you don't know that you don't know. So, depending on your contractors, those are usually the people that are self employed themselves and work for you. So, those would be people that if you did pay more than $600 to, they would be getting a 1099. Typically, I have PAs here, but I actually thought I had erased it, but clearly I didn't. PAs kind of fall in that murky area depending on what they do for you. If they are your right hand, they should probably be an employee. So keep track of that. If they have your logins to your bank accounts, check your email, get your mail. If they are a closely knit person with you, they might be an employee, which means you probably have to pay payroll taxes. So keep an eye on what their responsibilities are. Usually, contractors will have some sort of agreement or a contract. Um, they have control about when and where they do their work. They might work on their own systems or have their own methods, their own schedules. They pay their own taxes. They're self-employed. They're just like you and I with our writer businesses. They pay their own 15.3% on their own income tax return. You don't pay their payroll taxes. Again, if they get over the $600 and on an SOC corp, they need the 1099. One thing I do want to add on to the 1099 piece, oh my God, I'm so sorry, we're running out of time, is that if you go down to your local print shop guy down the road and he's a sole proprietor and you paid him $1,000 to print you books, that is not 1099 worthy. So that is that you just got supplies from him, and that is not 1099 worthy. If he did services for you and he redid your website, that's services. If you bought something from them that you're later going to resell, or I think the example the IRS gives sometimes is firewood. If you bought firewood from someone to heat up your home office and your burner in your fireplace or whatever, that's not a 1099 offense, basically. So just know that it is services, it's not those, and not the tangible things that you're buying. So again, they're paying their own payroll taxes. Generally, it's cheaper to have a contractor than an employee because you're not paying the payroll taxes and you're not getting into like employee benefits. So if you have health insurance that you want to offer to employees or retirement plans or paid leave, they're not eligible for those things generally. So that means they're also not covered for minimum wage or overtime. Generally cheaper to have a contractor than an employee. That's why a lot of people say they're like try to have people hired as contractors so they don't have to pay those additional expenses. There's literally audits every year. I have a client that literally just got audited last year, and the employment agency was like, these are definitely employees, get them on your plan. So now when he contributes to his SEP, if he wants to put 25% into his self-employed retirement plan, he now has to put 25% of each of their salaries into their retirement plans too. So when you're looking at retirement plans, keep an eye on whether or not you're going to be having employees, because a SEP requires matching across all the employees and yourself. Simple is different. 401k is different. I'm getting into a realm that I don't manage. This is what financial advisors are for. But when you are setting those things up, just keep that in mind. Versus when you have employees, they definitely have a work method. They work with you. They have a schedule. They do certain things in the way that you like. You tell them this is how you want your book formatted. This is how they format it. They get the W-2 from the end of the year. You pay their payroll taxes, and they are eligible for those health insurance, retirement plans, paid leave, workers' comp, overtime, things like that. So definitely keep an eye that you're not maybe paying someone who should be an employee, because you then have to go, if you get audited, you have to pay the taxes back, and it's a mess. So keep an eye on that. Mileage and auto, we talked about that earlier. Just check your odometer, set it on your Outlook calendar every year, 1/1, get the odometer. It'll be so much easier going forward, because you can see on 1/1/2024 what your odometer mileage was, 1/1/2025, that's the total mileage you drove throughout the year, minus the business miles from your business log that you kept in your glove compartment the whole year. Then you have your personal miles. That's everything that you need for your tax prep, for your mileage. All right. Keep those standard versus auto. Not going to talk about auto because no one ever really does it. The key things to remember: $2,500 goes office expense, or wherever the bucket is. Your federal estimates, if you're self-employed and you expect to owe $1,000 or more in taxes, you may need to make estimated tax payments. Again, I worked with high income clients, so their estimates were big. It was 50 grand a quarter kind of thing. If you're going to make a payment, make it certified mail receipt via check. I cannot stress that enough. I've had many calls with the IRS on my life, on my children's life, on my little test tube baby's life, that the IRS has messed this up before and applied estimates to the wrong taxpayer. And the estimates were sitting on the wrong taxpayer's tax account with the IRS. And they just had a $50,000 balance of prepaid taxes that should have been on my client's tax return. So write your social security number on your check, certified mail receipt, copy the front and the back. If you don't like paper checks, I don't like paper checks, IRS Direct Pay has a site. You can make the payments electronically, less likely for it to get screwed up, especially with how understaffed the IRS is. If you do have a W-2 job, you can just increase your withholdings to cover the excess tax that you're going to pay for your self-employment income, because again, those taxes that you withheld, they all get added together. So yes, they're computed differently, but then they're added together on the total tax line. So your W-2 withholdings or your spouse's W-2 withholdings can be used to offset that. Those clients that I'm talking about, I say you're required to remit federal estimates. Sometimes states also require it. Required is a strong word. I am not your tax advisor, but I'm going to tell you what clients told me. They didn't like giving the IRS an interest-free loan for a year when they were making the payments in April. They said that they would rather pay the whatever percent in penalties, because they would be making 7% in the stock market. They would be making more money by keeping their money with them than with sending in the estimates. Or they could use that money in the cash flow of their business, and they would just figure out the money situation and pay the extra interest and penalties at year end. So that is not my tax advice to you. You figure out your own cash flow situation and figure that out. But just know that, like, the IRS is not going to come after your dog, take your house, kick your mom, and slash your grandma's tires if you don't make the estimates. All right. So all of this is a lot to process. And I went very fast in all of this to try to get it all in. I'm so sorry. I've tried to make some things to lessen this burden. I hope they help. I have that logbook that I was showing Lee earlier. It's really pretty. I wish the paper was a bit thicker, but it is really pretty. It took me forever. I had to buy InDesign for it, and I'm like, what is this? Anyways, so that's awesome. I made like an actual tax handbook. Just came out yesterday, and I'm still waiting for my
Wow.
author copy. But that has like tax tips like, oh, the American Disabilities like tax credit with making audiobooks. Like, ooh, are you eligible for that? I talk about that. I talk about direct sales and the income taxes and sales taxes. I talk about, hey, did you know if you hire your kids on your sole proprietorship that you actually don't have to pay payroll taxes on them a little bit? And like I talk about those kind of advanced strategies in the handbook. The Excel spreadsheet is a masterpiece, that basically produces your Schedule C tax return for you as long as you enter in the numbers on the tracking sheet. That one's really cool. It might save you a lot of heartache. QuickBooks Online, I have like 4 other authors right now. I'm helping set up QuickBooks Online, but if that's something that you want help with, let me know. And then I'm also gonna have a series of masterclass webinars where I'm not talking this fast, that talk about all those things. If you I can probably drop in my, like, book
Yeah.
funnel link,
I was
where you
gonna
guys can.
say,
Yeah.
drop the links in, um, if you drop them in the Millionaire Author Mastermind, I can grab them when I post this recording and put them on YouTube and link them, make sure it's linked to the recording
Okay.
in the Facebook group. And then everyone will have all these things. I don't know if you want to run through the chat and see
Oh, yeah, yeah, yeah.
questions. I can answer the first few. You guys will get a copy of all of this. I can
Oh,
put the
so many questions. I'm so sorry,
yeah.
guys.
No. I wanted you to just go straight through. So um, there will be a copy of this slide deck and of course links to all the stuff on this page. I will put it up in the Millionaire Author Mastermind on Facebook and along with the recording. I'll put the recording also on YouTube. And yes, we have a question starting with Tess. I'm taking a big trip in April for book signing. I bought my travel package in October, but I'm making payments. Do I deduct the entire amount in 2023 or only deduct what I actually paid? And I think I can answer this one. It's what actually like left your bank account.
Yep.
And then, yeah, whatever's hitting the bank account or like leaving the bank account, like just look at the bank account.
Yep.
Sadie asks, say a person has another pen name.
Mhm.
That pen name has its own EIN.
Ooh, okay.
Would that still be filed on the same taxes?
No, no. So
Or
basically, with it having its own EIN, it's now 2 separate returns, basically. So the IRS is very weird about single member LLCs and sole proprietors. They view us as disregarded entities and they just want it on a Schedule C. But if you do have the EIN and it's receiving any payments under that EIN, sometimes with clients, what we would do is like if you had that 1099 and it went to that EIN, we on that Schedule C, on the main Schedule C, would actually list that out as a different revenue source. And we'd say, 1099 received to EIN, and then we would list it as like a memo for it. If you're doing your own taxes, I don't recommend playing around with that. But that's one thing that we had been able to do in the past.
yeah. And guys, if you have an author business, I would just keep all your pen names under that business and EIN number. And I even put my coaching under that. And it's just one business entity. I have one business basically, except then I co-wrote and we decided to set up a second business with each other. And that's for the income that we earn jointly. So I guess I'm not a great example, but most of you just have one business and then keep that business siloed from your personal life, which brings me to the next question. Tess asks, what if you accidentally pay for something with a personal card?
Totally fine. Totally fine. Don't freak out. So
Okay.
basically, when you accidentally pay for something with like a personal credit card, I do it all the time. I actually sometimes pay on Amazon. You know how you have like the 2 credit, like I have my business credit card and my personal credit card. If I bought something with my personal credit card, I enter it and just say that was an owner contribution into the company. If I pay something with my business credit card that was definitely personal, like my son's Tony, my bottom little spin Tony, you basically, when it's on your you basically record it as draw. So if you were using QuickBooks Online or something like that, you would just say that that was like an owner pay. If it's not something that you're tracking, if you're not reconciling your bank statements, I guess just don't include it in your Excel file. You won't be able to reconcile the bank statement, but if you're not doing that anyways, it doesn't matter. So don't worry about it. Don't do it a lot because then you're violating those streams. But if you do, it's not a big deal at all.
Yeah, this is why my husband's like, stop, it's annoying because it sounds like it's a pain. All right, Celeste asked about solopreneur. She uses QuickBooks. I'm a single member, but I took on a PA this year. Am I self-employed or do I switch to solopreneur?
Like a sole proprietorship?
I'm not
Oh, okay.
sure.
Plus,
So
okay.
that's me. So when I started working on my taxes this year and I pulled up QuickBooks, for starters, I used self-employed throughout the year to track everything. When I went on there, it offered a new version of it that's called Solopreneur that I wasn't familiar with. And it looks like it's if you do everything on your own. Now that I have a PA, I'm assuming I should just stick with the self-employed. But if I stop having a PA, as far as software, should I switch over to Solopreneur or does it not really matter?
So I have not seen solopreneur. I haven't seen them list that, so I can't help you with that. I know that like as you grow though, you might find serious limitations in the self-employed version. I don't like it when my clients use it. I want to cry. It has very it's it is so you're paying a lot for not getting a lot of services out of it when you compare it to the other programs. I don't know about the solopreneur though. I'll definitely have to look into that though, because that is interesting on whether like they're charging less for it.
So if I weren't to use self-employed, which version of QuickBooks do you recommend?
I think it's essentials. I think it's just the next level up because that's the one where you can actually look at the reports and you can run different statements and classes and you can see a little bit more and you get more abilities. I actually don't think you can even do 1099s on the self-employed version. I think you have to go up to the next level to do 1099s. Don't quote me on that though.
So QuickBooks Essential. And Celeste, you had another question, and it is for self-employed taxes, Social Security and Medicare, what would make you eligible for the EITC and deduct the employer equivalent in AGI? I know what that means.
Okay, so
So I read an article the other day and I was befuddled. So now you're here and I'm hoping you can unfuddle me, please.
A lot of acronyms in there. I have no idea what you just said, but yes.
all right, so earned income tax credit, is that what you're talking about? All right, so that is for when you're below a certain income threshold, then you get the tax credit on your tax return. So that really just depends on what your like gross income is. So I believe it's calculated on your AGI and not your total income. So that means that your deduction of your 50% of your self-employment taxes. So say that you owed, you made $10,000 and you had 15.3, so $1,530 of self-employment taxes for your business. You get to take a deduction for 50% of that tax. So that deduction of 700 whatever dollars, $800 gets to reduce your AGI. But it doesn't necessarily, it reduces your AGI, but I don't believe it factors into your actual computation of your EITC because that's just a factor of what your AGI is. So I don't think there's manipulation there on like being able to make it work one way or another, if that makes sense.
We might have to do
Sorry, am I unmuted?
yeah.
When we do that, when I was a bookkeeper way back in the day, I had to do that monthly for my employer. But as a self-employed person, do I make those payments quarterly and just withhold monthly, or when am I expected to make those payments?
Oh, the self-employment payments? Oh, okay. Those are just like quarterly. Those are just with your regular tax return if you were sending in estimates anyways. So those are those due dates right there. And so they want a quarter of your taxes that you're gonna be owing, minus obviously any withholdings, due in April, June, September, and January of the following year. So basically, by the time you file in March or April, you're hopefully having like a zero balance due in the eyes of the IRS.
Thank you.
Yeah, yeah. Um,
Okay, we have 5 minutes.
I'm sorry, I'm so chatty.
Sorry, we might just have to have you answer questions as people post them in the Millionaire Author Mastermind. So guys, take your questions and copy them so you can post them when I post the recording, just because there's a lot of questions here. And Cameron asks, it's hard to find tax prep people. Is it possible to do this on your own? And I think TurboTax can kind of help break some of this down, right? And softwares.
Yeah, so I mean, like, you just got really close to my face, but like, yeah, like this is how I'm doing my taxes this year.
Okay, so yeah, because they'll break it down in like question form, and it still is a pain in the tuchus, but I think you'd be able to get through it by yourself. And all right, I'll see how many more we can get through. But Erica asked, she has a side gig where she does formatting. Is that separate from the royalties stream?
She can include that up in the income expense line, because the tax return just says like gross income. And so you can net those all together. You don't need to break it out. You can if you want, but you don't need to.
All right, this is a fun one. This has to do with the cat, maybe. No.
Okay. All right.
Asks if there's an object that's really important to the story and I purchase it to be super familiar with, is it deductible?
So I write romance in my spare time, so you can imagine what kind of item I was thinking of.
Yeah, me too. Like that Megan. Yeah.
So it really, like, it kind of depends. So it depends on what it is. If it's like, oh, my character is driving a Tesla, I don't need to drive the Tesla.
Absolutely.
Not quite. If it's like a handgun, or if it's I guess you need to know your personal use versus your business use. So if it's an item that you're going to be using 50% of the time for your work, then you got to make that determination and maybe only take half of it on your business. But yeah, so you have to figure out how much is personal, how much is business, and would you want to stand up in front of an IRS court and say, yeah, no, I definitely bought that for my business.
Yeah, my porn subscription is absolutely, yeah.
Yeah, exactly.
Because she also asked if the book takes place in Italy, and I have a friend who's in Spain, and she's not deducting the trip. But if I went to Spain for a writing retreat or often I go somewhere because I'm going for a conference. So I have lots of documentation that I've signed up for the conference and that it's in Florida. And then I got a flight to go there and a hotel. That's very clear and deductible. Whereas my friend's trip to Spain was also for personal use. So she's going to use discretion with deducting. So I think that's it.
I think that's perfect. Because I mean, like, if you're writing about Highland castles and you're going over there to see them, like, I'm sure there's a component of it that is personal use. But if there is a portion that you are attributing to work, make sure you're documenting which portion of it is for work. Because it's not like you can't. I had some person the other day ask me if they can deduct a cruise because their character was on a cruise ship. And I was like, you want to fight that battle? Like, I'm not the IRS, but you do you. So,
all right. Oh, sorry. I didn't mean to cut you off. I'm just trying to sum up. I mean, this is great, but we do have to wrap up. Otherwise, we'll just be here for 20 more hours. But the foreign labor. So, people are paying like $25,000 to someone in Germany, but you really need to look up what the IRS says about a contractor in a foreign country. And it also might depend on the country.
Yeah, I think the form starts with like W8 EN or something
Yeah,
like that.
somebody, yeah, can we talk about the W/8BEN?
Okay, I think that's what they're talking about with the foreign
Mhm.
people
Yes.
documents.
Yeah. I don't think we have time to talk about it. Sorry. But thank you guys for coming, and we'll post the recording, and please ask more questions on that, and show up to all of Ashley's lovely resources, because some someone just posted, I wish someone would create a TurboTax just for authors, and maybe that will be Ashley's next business venture if we're all really nice to her.
Nah, it's all right. The Excel spreadsheet basically does it.
Yeah, okay,
It's
there's
done. You got it.
So thank you guys for coming and asking questions. And I hope this pointed you a little bit in the right direction. And we'll see you in the Facebook group.
Oh yeah, and the code I think expires sometime tonight. So just use that if you can.
Use it. We have to give them the link to it. So
Oh, okay. Yep. All right. The Lee 2024. I didn't
I
type
love
it
it.
in. All right. Awesome.
We'll get the link in the Facebook group.
Okay.
Yeah, Ashley, if you will go like right now and like post the links for this slide, and then I'll paste it when the recording is rendered. But thank you guys. So we'll see you next time.
Thank you guys for coming.
Bye.